Hello, this is Bill Merlo, and thanks for joining me on another video adventure. Now, what you're into is the series of video on our digital payment solutions, and this is such a big part of the club that we wanted to make sure that you completely understood it and we're feeling very comfortable with it. I won't spend too much time right now, but as you know, we're creating a new global economy, actually a closed-loop sharing economy that everybody wins. And I think that becomes more apparent as you watch these videos. But this idea of having our own digital currency that's global and around the world is such an important part of what we have. It makes us unique, along with the fact that we have a club, along with the fact that we have the membership the way we have it set up, and that our merchants can come in for free, and we've got a residual rebate system where everybody wins, and once we hit a certain level, then everybody shares in it, and then we add on this global digital currency program with the payment solutions so that we can go from country to country to country and work all together to make things happen in a big way. Let's just go ahead and talk about currencies in general. So let's talk about money. So first of all, early stages of money could have been anything. It was anything: livestock, skins, sacks of grain, shells, beads, anything that could be traded. But then it kind of turned into precious metals. Of course, that's when the gold standard came along. We used to have paper money because it became easier to transport, but it was backed by a precious metal. But in 1971, they removed all that about backing money with anything. And now what we have is fiat money. What that means is that it derives its value only from the government or regulation of law. And what happens is now the money supply is regulated by things like the Federal Reserve, the Bank of England, or other central banks around the world. So basically, the money is created from nothing, and it is a way of controlling the economy. Now, what is money for? Well, money is basically a medium of exchange. So money only has perceived value, and it's agreed upon that it has that value, and we use it to exchange for purchases of goods and services. Now, all of this is important and relative to our concept of digital currency. So the type of banking we have right now, or the type of system we have right now, is a centralized financial system. Now, what that means is we all have custodial accounts. That means our funds are all held in trust by the bank with a promise that it's available. Now, if you would think that you're going to go to a bank and you think you have $1,000 sitting there in the bank and that's yours and no one else can touch it, it's not the way it works. It just works that the bank is saying, when you come in, if you're telling us to have your $1,000, and we've done all the accounting to say that, it'll be here when you arrive. And that's because they have just a whole bunch of money, but they're moving it. In fact, in the last crisis, they moved it too often, and banks can turn that money over 20, 30, 40 times and start to make a lot of money from the money that you have sitting in the bank. Anyway, that's a different topic. But these people are all called trusted third parties. Now, they're needed in every transaction to verify ownership and transfer of ownership. That's because it's dealing with two people, and you need somebody in the middle to verify you're you and the other person is them, and that this transaction happened, and somebody's got to look after it. So in this centralized financial system, each account is private and holds the personal identity and the financial data along with all of their assets and holdings. So everything that you own, the cash you have, everything about your finance is known by someone and is held by someone other than yourself. And that includes your house, your cars, everything like that. So that's a centralized financial system. Sometimes the power from having access to all of these holdings leads to abuse by the holders, and the centralized data is always under the threat of being attacked. That's where all of the fraudulent situations happen. Now, also what happens is there has to be now a whole nother layer of regulation and oversight is added, leading to even higher transaction costs. And so every transaction, as you can see, has a fee. Every time we move money, either from the bank or even writing a check, there's a fee, as you know, or you go to the credit card, or even your debit cards, there's a fee. Your mortgage account, your CPA, all of this tremendous amount of money has to be spent on just tracking all of the money because it's all in a centralized system, okay? But again, because that's there, it can be hacked and gotten into. As you know, there's been lots of different things that happened, like 40 million cards were compromised from Target, 56 million cards from Home Depot. Credit cards were not designed for this day of the internet. We've got Russians and Chinese and everybody in the world hacking to get this information. And right now, of course, your identity theft is a very big threat all around the world. Fraud and this cybercrime is just huge. Now, another thing that this can lead to by having all of this under so much control is a lot of greed. Of course, that's what happened with the last catastrophe. There's a lot of people think it's coming again, but you can see how much the Wall Street people make over the regular people. You can see how many bank failures there are. You can also see that in that last crisis, it turns out that 700 billion was just a small part of what it took to regain that. In fact, we almost had a complete financial meltdown, even though this was all controlled by people who were supposed to know better. They said that it could be as high as $12.8 trillion that last crisis cost us, and we certainly don't want to go through that again, okay? But a lot of that has to do with because we're running so much on debt, and we're running on so much on derivatives. And I don't want to get into the whole economy of that, but we all know what that's like. In fact, if you look at Canada here, it's over $1 trillion in debt. For every man, woman, and child in the country is $30,000 is owed just to make up for their debt. That's peanuts compared to the United States. That's $18 trillion in debt. And that's $56,000 or $58,000 per person in the country. Even babies owe $58,000 the minute they're born. So they don't handle it very well. And of course, no one's really trying to solve that problem. They say they're going to. But human nature is that you're going to stretch it to the outer limits. Well, it's really what's been happening with a lot of the countries in the outer limits. And you can see there that some of their debt is larger than their GDP. And in fact, Greece, as you can see there at 130%, that's the one that's falling. That's the domino. One goes down, the rest goes down. And right now, of course, many of the world economies are in very, very sad shape. And it all, again, has to do with this debt, financial control, who's controlling it, who's taking it, what are they using it for, and who is really benefiting from it. I don't want to be in a soapbox here. I'm just trying to get a point across. That's a centralized system. When we talk about decentralization, I just want to give you a couple examples. So the first one here is like the post office. When the internet came along, it changed everything. First of all, everything used to be handled by the post office. You'd move letters in, move them out, count them. It was all physical, and that's a centralized government system. And back then, it had to be done. But in 1994 was the first time really on TV, and that wasn't really that long ago, that the internet was even mentioned. And that's where I like that ad where Katie Couric is asking, tell me, what's the internet? And he was saying, what's that thing with the @ symbol on it? That was 1994. They didn't even know what it was. Well, look what's happened since then. Email has taken over mail. The post office is having trouble surviving because they're competing with other places. But email is decentralized. It's right in the hands of the people. It's peer-to-peer. So remember that phrase, peer-to-peer. And that's decentralized communication protocol. Now here's another example, the news. Before 1990, we had 4 stations and a limited number of newspapers, and that was centralized, okay? They were able to bring in all the news, and they were able to distribute it all out, so it was in and out. Well, now look what happens. Again, the internet's come along, and it's decentralized. You can get news everywhere, online. You can have blogs, you have bloggers, you're not just news people, etc. Now it's power back to the people. That's what decentralization is. And in fact, it even goes beyond that. When you look at social media, that's another huge way of decentralizing. During the Arab Spring and stuff like that, they were using social media. People were finding out things that they couldn't find before when the governments were hiding things from them. Well, when you go peer-to-peer and people have access to just getting online and finding out things directly from people, the whole thing changes. So again, we're obviously setting that up for now moving into the idea of decentralizing the payment system. So this is where something comes in called a blockchain. The blockchain is as disruptive to centralized value transaction as email was to mail communication. It gets putting it back in the hands of the people. So what is a blockchain? Well, a block is a number of financial transactions that happen over a period of time. So this is block A, and block A had 1, 2, 3, 4. And let's suppose that was 1 minute, it could be 10 minutes, doesn't matter. It's a period of time. So in 1 minute, there was 4 transactions there. That's a block. Well, in the next minute, how many transactions happen? Block 2, which would be block B, had 1, 2, 3. And block C had 1, 2, 3, 4, 5. So now if I want to look things up, I can go and say, well, find me C2. And I know exactly what minute that happened, and I can get the whole chronological history of everything that happened. So that series of blocks is just something called a blockchain and is a continuous ledger. So I just want you to understand that because it's important for where we're going with this. So, okay, that's the blockchain. It has a big effect. Now, the blockchain is a decentralized, transparent public ledger that contains every transaction ever processed and enables any user's computer connected to it to see and verify every transaction. Get the idea? Like email or social media, everybody has access to it. But what's great about this in terms of financial information, everybody can see the blockchain. So you can see every transaction. There's no secrets. Centralizing has lots of secrets. Nobody knows anything. You have to be verified by somebody. No secrets here, totally transparent. I'm going to show you that as we go. So another big difference about decentralizing, everything is pushing instead of pulling. Let me describe those two things, pushing instead of pulling, all right? In a centralized banking system like checks, credit cards, anything you can think of, going to an ATM or anything like that, you give permission for them to pull from your accounts to make payments. So you have an account, and what you do is somebody writes a check and they take that out, or you write a check, they take that out. They have the right to go to that other person's check because they're who they are and pull money out of that account and give it to you. But they have to pull it out, okay? It's not like the other person just gave it to you. It's pull. Same thing with a credit card. When you go credit card, you're pulling money as opposed to pushing money. So that makes you part of a hackable database. Because this database is there, someone can find out about it. The other thing about this pulling system is that if something goes wrong and a couple of checks bounce or identity theft or anything like that, all of a sudden they can close your account or they can hold it. There's a lot of things that can happen. Basically, they own your account, not you. And I think some of you have experienced that type of thing. Well, in a push situation, like a decentralized system, value can only be pushed from one secure encrypted account owner to another. So it's like a cash transaction. If I have cash and I want to give it to you, only I can give it to you. You can't pull it away from me. You can't hack into this cash that's in my hand. I've got cash, and if I want to give it to you, I have to push it to you. I have to give it to you, okay? So if that's the case, there's no need for personal identification. There's no need for us to have accounts. There's an open record and a verification that was done with account balances, and that's how we know. If I gave you that $10 and I asked somebody to verify that, then great, I did that, you got it, it's verified, it's done. And we don't have to worry about it anymore because we weren't involved in past dues, we weren't involved in credit, we weren't involved in anything. So it's very much like a cash transaction. But the great thing about the pushing technology or the decentralized, remember that part, everybody can see it. So here's this ledger, and every user can see and verify every single transaction to make sure it happens. In fact, certain people specialize in verification. And that's another neat part about this blockchain technology. So part of the blockchain technology is it only push from one member to another, that there is a group of people that verify it, and that's what makes the system so unique, and that everybody can see it. So I guess it would be those three things that make it so unique. So now, just like the internet made it possible to send information anywhere in the world, we now have the ability to transmit value anywhere in the world using this push technology that we're talking about here. So there's no central authority. The security is put in the hands of the end users of the system because everybody can see all the transactions, and a certain number of people will have to verify the transactions that they happen. And the collaboration of the thousands of participants in the network make it peer-to-peer. That's what that diagram represents there. So no, I want you to understand that this technology is new and evolving. What I mean by that is just getting better. It doesn't mean that it's doubtful because the blockchain technology is absolutely working. It's just a brilliant idea whose time has come, and it's another form of decentralization. What I basically mean now, it's kind of like where the internet was back in 1990 or 1994 when I was talking. Look at the advances that have been made. There's going to be more and more layers of advancement on top of this. So we're pretty new in the game, but not so new that there's any doubt about the game. So that's what's important to understand, that this is a very solid way of doing things. I just really want you to understand, what it is and why it's so good. What are the advantages of this digital payment solution? Well, first of all, you can have as many accounts as you want to. Every transaction is pushed from one account to another, and it's completely open and transparent to the public. Okay, it's fast, efficient, easy to use. It's like sending currency from one computer, tablet, smartphone to another device to anyone, anywhere in the world, day or night, without stepping through multiple currency conversions. That's another big thing. Totally global. Digital currency networks cannot be tampered with, making them incorruptible, immutable, uncorrectable, hack-proof, and leaving no place for fraud or identity theft. I think you should probably read that one over again. That's pretty incredible compared to what is existing and going on in the world right now. Now, another big advantage with no trusted third parties, remember those TTPs, trusted third parties, in a centralized system, we don't have any of those. With no credit or chargebacks, it's all like dealing with cash. There's virtually no transaction fees, okay, because that's where all the money went. The money used to go for the fraud and for all the people necessary to handle this. This is all done electronically and all done digitally. So it literally, when I say virtually, maybe it's a penny or 2 pennies to send money in any particular direction. And actually, it's a very small fee to convert from digital back to fiat currency, and maybe 1%, something like that. So very, very low fees compared to like what, the 3 to 7% on every single purchase of a credit card, or the 18% interest that people have to pay to have a credit card. So why does it cost 18% to have a credit card? Okay, well, the cost of security is very, very high. Centralized database are shared. Every time you use a credit card, write a check, or buy online, your information is being stored somewhere. Well, hacking. Centralized database systems are always under attack for the credit card, financial identity, and private information for fraud. And I tell you, it's a big, big game out there. It's huge amounts of money that is spent trying to protect this. And this is one of the major reasons for the high cost of transaction fees. Those banks and people have to cover this if they're trying to protect you, and sometimes they don't protect very well, but that again leads to more costs, all right? Well, decentralized blockchains can't be hacked. If you look at that, again, it's all in individual computers all around. There's no identity or centrally stored information. It's already open. What is somebody going to find out? Okay, that's important. That's also important, and that's why I put this in a different color. The decentralized system cannot be hacked, all right? However, you'll find you'll have your digital currency, or you're going to have money tied in various wallets. Now, that can be compromised, but it's only compromised if you allow your password or your, now that's the next thing, they don't actually have passwords, you have a passphrase. They want to make it more complicated. So when you have a passphrase, there is no way to go and collect that. If you lose that, you're going to lose the money in that account. So this, because I really want you to get this, there is no centralized database. You have a standalone account. You put your digital currency in that account, and it's up to you to protect that account, because no one can do anything with that account. No one can get at it. No one can see it. It's your account. It's just like you have cash. And so you better be very, very careful with where you save your passphrase so that no one can get that to get into your account to be able to move any of that money. Only you. They have another great system called an Authy system, and this is where they actually tie your account to your cell phone and make you pick up your cell phone, and it's a real simple process, but you get a separate number because you're about to make a transaction. Then you say, okay, well, give me an Authy code. You go to your cell phone, and that is attached to your account, and for 30 seconds, as long as you put the number that's on your phone into that account, then it says, okay, that's good, that's you, because it's got your phone there. So it's another way of backing up, since you can't have a stored password anywhere. So again, enough said right now. I'm emphasizing this because it's the one chance I get a chance to really talk to you. Be really careful with where you put your passwords. Keep it in a very safe place, and always get this Authy thing down. Really simple thing to do. All right, let's move on then. Now, why do merchants want to go digital? Well, it's really apparent, okay? First of all, it's easy to set up, and there's no charge to set it up. Easy to receive through a payment solution. All they got to do is scan your QR code or just take your number and do the transfer. The other thing is save money. Oh my gosh, wouldn't it be fantastic if a merchant had no credit card fees? If they got 100% of the money they were asking for? The fees today are huge, especially if they're giving fees on reward cards. It could be 3, 6, 7, 8% that they're paying. Well, they're going to be able to keep all of that. And one of the reasons they're doing that is because the extra cost for fraud, the extra cost for reward programs, it really costs a merchant a lot of money. Now, we're talking about our merchants wanting to give rebates. Would they be able to give rebates if they were keeping 100% of their retail value as opposed to paying on the credit card? Absolutely they would. This is going to be a win-win for everybody in using this, okay? Okay, digital payments leases are free to the merchant. Extremely low transaction fee, already mentioned, maybe 1 penny. The customer's paying the penny if they're transferring to the merchant. The merchant will have to pay if they want to take some of that money and transfer it into fiat currency, but they may want to keep it because they can now pay with the digital currency to other merchants. They can also pay maybe the rebates back. But once we get this thing going so we can cash it in, cash it out, it's going to be fantastic. So we really got to understand the value of this once we have this whole exchange thing factor, and we can turn all our digital currency into money, or money into digital currency, and move it around in our own closed loop economy. That's what we've been talking about all along here. Another thing, there's no ID necessary. So that means there's no fraud, there's no bounce payments, there's no chargebacks, which incur losses or purchases and threaten bank relationship. When they come in there and they get a lot of chargebacks, the bank's going to potentially pull their credit privileges, or they come back and they charge them more, or they get an overdraft payment type of thing. So all of that stuff goes away. Again, I guess I would have to say, because we're basically dealing with cash. You got to keep that in mind, okay? But it's a really, really great thing for the merchants that way. There's easy conversion back to fiat currency. That's our whole purpose of talking about this. It's going to cost about 1%. And here's another thing. I'm going to show you this in the next slide too, is that it opens up a large international market. Digital currency is the same all around the world. It's not like every time you have to move something from Canadian to American, you know what that's costing right now, or from American to Euro, you have to do this conversion thing. We just send the same coin all over the world, and then you basically just change it when you want to take it out as a fiat currency. Let me emphasize this again about the international markets, because what this does is expand more markets for merchants. You know, the rest of the world is not like we are. They don't have credit cards. A lot of them don't even have bank accounts. But only 25% of the world can actually buy things online. When we mean that actually buy things, because they have a credit card. Most places, even if they have a credit card, it's very much more expensive or less convenient than over here, and it puts the price of things out of reach. So by having digital currency, there can be more markets opened up for the various merchants. Let me give you another example that shows you how lucky we are. Unbanked. Well, what that means is that most of the world is unbanked. The World Bank estimates that 2.5 billion people do not have a bank account. 6 billion people, even if they're lucky enough to have had a bank account, they don't have any access to any international markets. There's basically maybe some kind of local bank. They can't go buy things online like we can or shop across the world. 6 billion people, that's 2/3 of the world population that can't reach out beyond where they basically live and whatever backward type of banking they have, all right? To be centralized, to have a detailed bank account, all the complexities that go with that are very difficult. Even over here in the United States, 70 million people, that's 18% of our population, is unbanked. Now, what the solution is because we have low fees. Anybody can basically get a digital wallet. The wallet privacy, you don't have to have any identification. The security, the ease of use, and also this being like a cash bank, it makes it very easy for anyone to do all around the world, because it doesn't make any difference where you're transferring this. It all works exactly the same, and I'm going to show you how simple that is to do. I mean, it's super simple. And now here's another big market, remittance. Did you know that there's $500 billion per year transferred to help family members in poorer countries? For example, the remittance is 20% of the Philippines' gross domestic product. You get that? The amount of money that family members from outside countries send back to their family members counts for 20% of their economy. So that's huge. Well, obviously people like this is called the intermediaries, those centralized people want in on that. That would be people like Western Union or PayPal or other type of transfer fund places. They charge 7 to 10% to do that. So 500 billion, you figure out 7 to 10% of 500 billion, that's $50 billion. You can see that that's a tremendous business for those money transfers. And of course, who does it hurt the most? The poorest people in the world. Well, again, with digital currency, pennies to transfer this, and then 1% to change it from the digital to the fiat. Way, way lower cost. So that's why this is huge. Now, I just watched a video with Bill Gates, and this is one of the graphics that was on there. Exactly what he was talking about poorer countries needing banking and needing a banking solution. Mobile phones can help people make the most of their money, because he's talking and comparing old-fashioned banking with new mobile banking. And I'm telling you what, I would put the new digital banking right in there with the same thing, because he says, and if you look at the blue, it's stored digitally, it's money in, money out, instant transfers, and safe and efficient. And those are the 4 things that describe what we're talking about right now when we're talking about the digital world. Let me tell you another big market for digital payment solutions, and that is the millennials. Millennials have a very bad taste in their mouth about credit. Number one, they have a lot because of their student loans. They didn't necessarily want those, okay, and are very upset about being saddled with it and don't want more. But number two, they saw their parents and they saw what happened, with that last crash of all these, negative effects of too much credit. So they're learning from that. Now, what they want is to have a trusted system we have in this digital, and they would much prefer to be better money managers. And I'm going to tell you what. Dealing with digital, which is like a cash basis, is a great way to become an efficient money manager. And especially, I'm just going to throw this right now, when we're talking about being able to receive rebates from the Worldwide Shoppers Club, take all of those rebates, take it digitally, keep track of it, start putting that towards your debt. Pretty soon you'll be out of debt, and I'll tell you, the whole world will look different. One last market I want to look at is microtransactions, and those are small payments like tips. Instead of likes, you can actually send somebody 5 cents or 10 cents or 25 cents because you liked reading their blog or something like this, okay? Instead of being able to buy a whole magazine, you can just go get a little portion of a TV show. Or what the thing about this, you can do very, very low payments. This would also help with micro loans and different things like that. So it's very, very small. I mean, go ahead, just try and send somebody a quarter in any other way. Okay, you're not going to send it a quarter on a credit card, all right, or a check or anything like this. But with this, literally, you can send people 25, 50 cents, no problem. It's the same. It costs a penny. It costs a penny whether it's 50 cents or $1,000, and that's an incredible advantage. So let's just wrap this up and look at the idea of digital payment solutions acceptance. Is it really being accepted out there? I mean, who knows about this? Well, here's a little outfit called Goldman Sachs. You've probably heard of that. And it says in the article, the future of finance, redefining the way we pay in the next decade. What this says is cryptocurrency. Now, cryptocurrency is basically another way of saying digital currency or digital payment solutions. I really like that one because that's what we're really doing, is we're using it to have really, really inexpensive payment solutions. But anyway, cryptocurrencies are part of the technology megatrend that could change the fundamental mechanics of financial transactions. Well, the more you do with this, that's for sure. Now, how big is this? Well, we're going to talk mostly about Bitcoin in terms of acceptance. We'll explain that why in just a minute. But that's $5 billion of Bitcoin that are out there. The transactions of Bitcoin are going over $50 million a day. And so you can see that that is quite a bit of transactions and just getting started. The wallets have grown from 1 to 7 million. That's an increase of 700% over the last short little while. Merchants have grown up by 1,000%. Okay, more and more merchants are accepting Bitcoin. We're talking about Bitcoin here. The Electronic Transactions Association survey found that 23% of merchants plan to use some type of digital currency within the next 24 months. Well, that's almost a quarter of the merchants, okay? Now, here's another thing. Venture investment in support technologies and applications supporting the blockchain. So we're talking about blockchain technology, which we just described to you, reached $30 million last year. I think that was the year before, because I think actually the total investment jumped up to 400 million and is rapidly approaching toward $1 billion from a couple of different articles I've read. And again, this is the same amount that was invested around 1995 in the internet. Let's continue and just show you a few more. Here is the Capital News. That's from Kelowna up in British Columbia. And this is virtual currencies challenging traditional banking system. And I guess that was a whole 3-4 page article all about Bitcoin and its acceptance around the world. Here's another one. I'm sure you guys have all heard of PayPal as a method of payment. And actually you can see here on the diagram where it says buyer's credit card company, PayPal merchant bank, PayPal chargeback department, seller. These are all extra charges as it goes along the line here. Anyway, this is saying Bitcoin, online payments, and the scourge of PayPal. And again, this guy's saying that it's going to cause them some difficulties in their business because Bitcoin is so much easier and less expensive than PayPal. That's basically what they were talking about here. Here's another one from Goldman Sachs. That's a big bank, as you know. Bitcoin is a megatrend. Bitcoin, along with improved payment security, big data analytics, and faster payment networks are the components of a technology trend that will disrupt the payment ecosystem. Now, Deloitte is a large accounting firm, okay? They're one of the big four in the world, and they talk about the potential for the blockchain technology, that it's becoming wider and wider accepted. But I just want to read the last sentence here. In the banking and insurance sector, for instance, blockchains could be used to strengthen and streamline compliance checks on customers and reduce the risk of fraud. That's what we're talking about. Remember, the blockchain is the peer-to-peer, everybody sees, open, transparent, push as opposed to pull technology. Just to remind you of what that's all about. The more you watch this stuff and stick around, the more you'll understand it, and you'll see the simplicity and the beauty of this. Because the more you understand this, the more you feel comfortable with it, and the more you'll want to participate in it, I'm sure. Okay, here's JP Morgan. Now, this is another, huge financial institute. JP Morgan partners with digital assets on the blockchain trail, and has teamed up with this holdings to a blockchain initiative that aims to make the trading process more efficient and cost effective. That's the things I was talking about where technology, see again, the blockchain technology is not in question. That's not like somebody wasn't checking the internet. It's what I was saying about the 1990s and it's improving. These are all the applications that they're getting to do this, and there's more and more of them all the time because you can really use this blockchain to track and record anything. Anything that's in the record stays there permanently. And again, remember this blockchain? We could go back and look at every single transaction back to the beginning of time. In fact, there's even a phrase called the Genesis block. That was the first block ever created, and that was just back in 2009 when the first Genesis block was happened. So since then, of course, there's been a big long string of blocks. But everything's visible if you ever want to go look at it. I don't think you do, but that's the nice part about it. It's all there. And lastly, the value of Bitcoin, teaching your kids financial responsibility. The whole idea there is that if the kids got onto cash transactions and financial transactions, then it would be much better for them in the future. And I definitely agree with that. Wish I would have learned it earlier myself. All right, so we're just about completed on this particular video. This guy here, though, I would really say go up and look at his name, Andreas Antonopoulos. Obviously, he's a Greek name. The blockchain is an encrypted, decentralized network model for financial security and trust and can be used for so much more than currency. Well, that's what I was just about to say. They're going to add on more things. We're just at the beginning. This technology will move so much faster because it's driven by the global freedoms of the internet. So it's in the hands of the people is basically what he's saying. But the reason I centered this one out is this guy did a great talk. This was a talk he was giving, as you can see, the Senate in Canada. It's probably about an hour and a half long, but if you ever want to find out about the idea of digital currency and where it's going, what's going, this guy is absolutely an expert. It's a fascinating conversation, and you may want to dig into it so you've got a higher comfort level.